VEC gold still under some pressure. Another factor that we must mention, and we'll put to our guest in just a moment, and that's the Reserve Bank of India. They have come out with an extension on gold import restrictions. Now, how much that accounts for the falls? Be interesting to put that one to Jordan Eliseo, the chief economist at ABC Bullion. Jordan, warm welcome to you, live from our Sydney CBD studio. We can get on to low interest rate environments and how that's proving potentially a supportive factor into the future. But what about that factor with a Reserve Bank that's interfering in that commodities import story for India?
Yeah, there was no great surprises that the Reserve Bank of India made the decision that they did. Actual physical imports of gold into India for the month of April were absolutely unprecedented. Around about 160 tonnes was the number reported. So that's obviously had a huge impact on their current account deficit, and it wasn't surprising that the Reserve Bank of India made the decision they did.
What else is impacting gold right now? I mean, obviously we've got a big week with all that economic data out of the US, and the end of the week, of course, the highlight, the non-farm payrolls. Well, perhaps the highlight. What else is weighing on the gold price right now, or impacting the gold price moves?
Well, obviously, any talk of QE tapering by the Fed is having an impact, although as we saw what happened in the stock market overnight, that's also impacting stocks quite greatly as well. But obviously, if we see a continued sort of deterioration in economic data, then that'll tend to indicate the Fed won't taper anytime soon. That'll be supportive of bullion prices. But if any time the Fed talks about easing off the pedal, we might see prices pull back.
You are in the former camp, I take it, and not the latter.
Absolutely. I think that we're going to have to see the Fed continue QE in one form or another for the next several years, Carson, and I think they'll be keeping rates low as well, and those two factors will keep bullion prices supported over the medium term.
So looking then, yeah, I mean, what sort of levels are you watching in particular then on bullion?
In terms of a price break?
Yes, yeah.
Well, I think if we get
around that 1400, isn't it? So
that's right. I think if we close above 1420 for the week, then we might see a lot of shorts want to cover their positions, and we could very quickly gap up into the 1450 range. But if we break below 1380 odd, then we could see a little bit more downside in the short term.
To where, sort of?
Well, I think there's a chance we could retest that sort of 1320 low that we saw in the sort of shakeout in early April. That's not my prediction of where prices are going, but it can't be ruled out.
Jordan, tell us about those clients who have been looking at the Australian dollar, which seems to have relatively held up against falls in commodity prices, even though we are back below parity. Does the psychology change at these levels as far as an appetite for going offshore and making that play into bullion?
Well, I think obviously the potential for the Aussie dollar to weaken considerably over the next couple of years certainly adds to the appetite for investing in physical gold. If we obviously see US dollar prices stabilise or even increase, as well as a continued fall in the Australian dollar, then Australian dollar bullion investors will get double the bang for the buck. And in fact, that's what they've witnessed over the last month. They've actually performed quite well with the sort of 7% fall in the Aussie.
Just looking, I guess, at the economic data that you're seeing in the US, do you see, any chance that perhaps the Fed might look to actually increase its bond buying program? I mean, all the talks about tapering, but is there any sense that perhaps it's going to disappoint, and we could actually see that yield differential protected?
I think absolutely. I think if you look at the raft of economic data, obviously you can infer different things from one day to the next, but as an aggregate over the last few months, I think most US economic data has been quite disappointing, and therefore I think there's every chance that the Fed will actually increase the size of QE at some point this year, and that would certainly be very supportive for bullion prices.
Let's get on to rates and yesterday's decision. You're of the view that we should not be ruling out a move down to 2%. Have you got a timeline for that?
I think we'll see 2.25 to 2% by the end of 2013. I think we'll be at 2% or below by this time next year. I don't think there's any doubt that the Reserve Bank will cut again. Their statement yesterday was very supportive of them pushing rates further down, and obviously that's going to cause some problems, Carson, for retirees and people in term deposits.
And so when do you see those cuts coming? What, one in the final quarter, one the first quarter next year?
I think we'll get one in Q3 of this year, another one in Q4. and then, as I say, I think we'll be down to 2% by the end of Q1 next year.
Is it going to be back on domestic factors still, and what, looking at that unemployment rate, that'll be the catalyst, or something else?
Well, I think there's two things, Carson. I think a continued weakness in the Australian economy. So Dun & Bradstreet's business expectations were out earlier this week. They were very weak. Retail sales were poor. So obviously a continued deterioration here could cause the RBA to cut, but also if there's another flare-up in Europe or a problem in America that rattles share markets, the RBA will cut off the back of that as well.
All right.
Jordan, thanking you as always. Have a great day.
My pleasure, Carson. Cheers, buddy, as well. Thank you.
Jordan Eliseo there from ABC Bullion. We move on. McMahon.